What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is September 6th of 2022. Let's dive into the video, team. We have the S&P 500 for today's session, finished down 0.38%. We had our NASDAQ QQQ finishing down 0.72%. Our IWM small caps finished down almost a full percentage point. Dogs of the Dow were only down 0.5%. And our ARK Innovation ETF finished out as our biggest loser, down 1.23%. Pretty much all of these indices closed towards the lower to middle end of their day's range. We did get a pop in volatility. This was one of the first signs that we are starting to see some fear and or capitulation in the market. We'll go into more detail on this shortly. And we had pretty weak breadth in the small caps, only 30% advancers. Overall, a volume was only 31.1% advancers, and the trend model remains at a -1. Today's economic data. Really, we've been in this death spiral where the Eurozone is super weak economically. The United States is quote unquote, pretty strong, I guess. All the data that we've been getting is coming in line or maybe even a little bit above expectations. And whenever that pattern shows itself, oh my gosh, some weak Europe data, oh, now we got some strong US data, that's creating upward pressure on the dollar. And we're in this bad news is good news is bad news type of environment. And we got more of the same of that today. We had some ISM non-manufacturing PMIs that came out at 10 a.m. And as soon as this number came out above the estimate, the market just kind of folded, wobbled, and we started moving to the downside. Tomorrow we are going to have some more economic data, much less significant, but we do have some Fed speakers. We have Barkin at 9 o'clock, we have Mester at 10 a.m., and we have Brainerd at 12:35, right around lunchtime. Today's heat map, you can see we had a bit of a mixed tape. We had energy stocks that were pretty weak, but consumer defensives also sold off. Many of these mega cap tech monopolies were trading down on the day, including Apple, Microsoft, Google, Amazon, and Tesla was really the lone ranger that remained positive out of those tech monopolies. Sectors, the MSOS Cannabis ETF, which had been pretty strong over the past week or two, was down 4.02%. Other big loser, we had KWEB, the Chinese Internet ETF, that was also down by 3.62%. In terms of the big winners for the day, the solar energy sector, ticker symbol TAN, was up 1.87%. And we also had real estate up 1.15%. We also had the European financials that were up 0.6%. Style factors, best performing style factor was quality. It was only down 0.1%. We also saw a pretty good performance from the Momentum Group, only down 0.25%. And then worst performers on the session were small cap value, which was down well over 1%. And the other big loser was high div low vol, down 0.66%. Now let's take a look at these indices and see where things are shaking out for today. So S&P 500. We are starting to see some long lower wicks on these candles, which is good. But today was day 14 of the sell-off. Remember, the sell-off that occurred in the fall of 2020 lasted 15 days, and the sell-off of 2021 lasted 20 days. So in my opinion, we are getting to the tail end, but we're kind of in the eye of the storm here. We did retest this 5-day EMA, but we ended up failing at that level. Let's actually zoom into the hourly chart. On the hourly chart, you can see we're trading below this weekly value area, and we were actually testing the bottom of value in pre-market and overnight, and then we just wobbled and fell below it. What I would like to show you though is the biggest volume came on some of these green candles where it looked like the market was going to slip into the abyss, but some buyers stepped in. Look at this candle at 10 a.m. So when you have every reason just go to the downside, the momentum is facing down, like everyone's underwater, the whole 9 yards, oh my gosh, news catalysts that are against us, economic data points that are against us, but then you just see buyers step in. That should definitely give you some pause. I think as risky as this environment is in terms of if I put on longs, they might go down. I do think that we're now in a position where the shorts are just as risky because the market's very oversold and, we're pretty extended to the downside. So I don't really think this is a spot where oh, trend is down, so let me short into it. That could be pretty tough as well. Let's take a look at our NASDAQ, see how that one fared today and how it's doing in the after hours. NASDAQ also traded down. We took out this Virgin point of control down here, which is good. What else did we have? Russell 2000. This was also down pretty big today. We have not yet taken out this VPOC. We have one down here at 1742.9. Let's take a look at our Dow Jones. Dow Jones also down, and we're trading right down to this Venom S1 pivot level. And let's check out the volatility market. So the VIX is finally starting to move. We were in this weird paradigm for the past week where the VIX was moving lower while the S&P 500 was also moving lower. And I'm not going to lie, it didn't make much sense. I mean, it does mathematically, because the higher the VIX is, the higher daily move is implied. So if you're getting small downside moves, the VIX can still contract. But typically when you get that fear, that panic, those put buyers, usually the VIX spikes when the market moves down. That's what we saw today with the VIX up almost 6%. We can also see that the VVIX had a bit of a spike. VVIX up 5.48% today. But the big problem is our dollar index. Every single day we're getting some sort of negative news out of Europe, and then it gets paired with some better than expected news in the United States, and it's just making the dollar index move higher, and it's creating complications, within the financial system. Our treasuries really started to come off today. Look at this. So we're getting very close to retesting the lows that we made in the early summer, but what's a bit perplexing is that the inflation picture is actually looking a lot better. If we were really entering a situation where, okay, the economy's going into a recession, you would think that the 10-year Treasury future would be bid. You would also think the 30-year Treasury future would be bid as well, but that's just not the case right now. So I'm not sure if it has to do with poor liquidity due to the Fed taper or really what's going on, but something has to give. Either what's going to happen is the dollar is going to sell off and treasuries are going to catch a bid. In that scenario, maybe stocks, get a little oversold rally. If bonds continue to just sell off and the dollar index continues going higher, really none of these financial assets are going to do well. That is definitely the not happy path, so to speak. But we were seeing some names that actually fared pretty well. And these are some of the names and themes that we own in our portfolio. Wolf, this is a semiconductor stock. This one actually finished out positive, up 0.16% on the session. We saw the solar names were very good. Array, we are short some puts in this name. This one finished up 2.47%. The big winner within the solar space was Enphase. Enphase was up 4.93%. Take a look. This is a pretty nice reset. Now we're back above the 20-day simple moving average and this monthly point of control. And then the name that we are overweight, CSIQ. This one also had an advance, up 0.92%. We saw Twitter, very baby minor advance, up 0.05%. At least it was not red. And GFS as well. Another semiconductor stock, up 1.76%. So we are starting to see those high quality names bucking the trend of the market. That is a good sign. But again, some of these cross asset signs that we're getting, like the strong dollar, the weak treasuries, those things, they're definitely not good. Let's take a look at the trades that we did for today. In terms of common stock, we got long this TARK ETF. This is the double leveraged innovation ETF. Picked that up for $16.09. This is really just in case the market gets a bounce, and in case these treasuries catch a bounce, this innovation ETF, that should really be able to capture that theme. Now we also did added to the SPY September 16th, 397 calls for a 358. We have an average cost of 696 for those. So this right now, it is an underwater position and took the opportunity to add to it. We'll see if we end up getting this bounce. Remember, we have CPI that's coming out next week. I do believe the CPI report is going to show another deceleration in inflation. And if that happens, that could be the catalyst that we really just need to get off the canvas and really just sell off the dollar. If inflation comes in below expectation, downward pressure on the dollar, upward pressure on bond yields, and that could fare pretty well for TARK could also fare very well for SPY. And then we also took the long PDD 70 strike March 17th of 2023 calls for 1290. And PDD, it is showing some very nice relative strength within that China group. And this one, yeah, pulled back, undercut the 5-day EMA, and perhaps this 10-day EMA starts to catch up to price. I did give myself some room to add to this position. So let's say if maybe we pull back to this monthly value area high, that could be where I add to that position. If we don't get that, then I do feel comfortable just keeping on what I have on. So yeah, heading into the end of the week, I think the most important thing is being able to get to the CPI report. Right now, it does seem like we're just in this death spiral where equity investors are on their back foot, bond investors are on their back foot, and it's really just not a safe zone within the market. I mean, I am starting to add exposure, and today I actually got pretty aggressive. But we're still in the danger zone. Make no mistake about it. I'm starting to see some signs that are pretty good. Like we are starting to see some capitulatory put buyers stepping in, which I always like. This is our intraday put to call ratios, and you can see we had some panic put buying early in the session. We had a 1.15 total put to call ratio, and throughout the day it really just remained elevated. I think every day that passes as this down sequence gets more and more mature. Remember, we're on day 14. Tomorrow's going to be day 15. In 2021, from peak to trough, it took 15 days for the fall correction. That was in 2020, excuse me. In 2021, it took 20 days, peak to trough. So far, remember, tomorrow is day 15 for us in this fall correction. So do I think we're closer to the beginning of it or the end of it? I certainly think we're closer to the end of it, but we'll have to see what happens. So definitely a page turner kind of market. And today I wasn't really super active. I'm just kind of waiting for the next sequence and just trying to be as still as possible while the market is just having this crazy intraday volatility. With that being said, we will see you all tomorrow. Enjoy the rest of your evening, everyone.